Hello. Before I jump into the content of the slides, just give you a little update in personal life. So I became a father 4 months ago, actually today. A little girl is sitting over there, so hopefully she doesn't add too much commentary during this. It'll be quick. And part of becoming a father, there's a change in expectations of how you live your life, right? So for example, I disposed of or got rid of my motorcycle, although I wasn't really using it much, because that's supposedly something you really shouldn't do with a child in your life. But because we're in a public forum and I feel safe that there's witnesses, I think this is a time I could say, honey, I got a new motorcycle. So it's been, I'm just kidding. I would not leave this room. No. With the expectations of that come with becoming a father, there's also expectations that I've noticed as time passes in the accounting sector, and that's what the focus is. I own and operate an accounting firm here in Burbank, nearby. I'm actually an alum of Woodbury University. I'm also a chair of the accounting program here. And over the course of my 20-year career, I've noticed a lot of things shifts in how people perceive accountants, and in particular clients and prospective clients. And then the focus of this discussion right now is about some of the ways in which those expectations have shifted, and most of which are commensurate with changes in technology. So actually the preceding presentation was actually a perfect foundation for what I'm going to talk about now, because a lot of things that changes expectations now are because of those things that people are accustomed right now, right? The here and now, right? They want stuff now. You only have 4 to 8 seconds. One of the areas is do-it-yourself accounting, right? Now you can Google anything. How to install a light switch, how to build a shed, how to maintain your own books, how to navigate QuickBooks, right? If you could do all this stuff yourself, what value is the accountant providing, right? And it's true, you can Google all this stuff. But despite being able to Google all this stuff, being able to understand and implement what you research could still be a little challenging, right? Just because it says what the answer is doesn't necessarily mean that you know how to apply that answer, right? And that's where the accountant provides some value. The value of validation. I'll give you an example. I had a client a few weeks ago that's dealing with a sales tax issue, right? Because he has a major client, the biggest one he ever had before. He sells servers, like media stations, big computer systems. He has a major contract coming over from New York, and he doesn't want to look foolish in front of them. So he asked me, what I have to do in terms of sales tax, right? Because I don't have a business there. And I started explaining to him that there's a case from just a couple years ago, Wayfair, that kind of changed how Nexus is saying that you have an obligation in a particular jurisdiction, how that impacts how sales taxes are addressed when you sell things online, as he does. I said I'd be happy to look into it, right? It's a little complex, right? And I have to understand your nuances of your business in New York since you reside here. And he said, well, it should just be easy because I don't have a business there. Then the next day, he gets back to me and says, no, I contacted a colleague that does supply chains at another business out of New York, and here's what he told me. I could just disregard it, right? That's okay, right? So again, if he's able to Google it or ask someone else, why is he asking me to validate that answer? Why should I validate it, right? Whether I know it or not, right? If he's just a tax client, he's only paying us just to prepare his taxes, right? And the value of that answer could determine whether or not he comes across with the right impression with this major contract, this major client in New York. But also, what he's really doing is he's seeking to offset some of his risk. Even if you know the answer, even if you could Google the answer, if you could get it in writing or even orally from a licensed professional, now you have a hook, right? And there's a reason why we have in the accounting profession or the legal profession, why we have malpractice insurance, right? Is for that very reason. So part of what people are paying for is not just validating what they could Google and figure out themselves. Part of what they're paying for is that peace of mind that, if something ends up being wrong, if I misinterpreted it, someone else might have to pay, might have to cover those whatever expenses I incur. Another example, we have another client group. They have a couple companies. And one of my associates just chuckled because he knows exactly who I want to be talking about, without naming names, that perpetually is interested in tax mitigation strategies, right? Is adamant that there's a way to not pay any tax when you're making money. We'll get a question. Oh, my daughter had a comment. She said, why not? Why do I have to pay tax? All right. He spends, I'm confident he must spend 10 hours every single week doing nothing but just researching tax mitigation strategies, right? He's not a tax person. They started a business in the crypto space with mining rigs. Does everyone know what mining rigs are? I think of it as just like a high-end, powerful computer system that's mining Bitcoin or other cryptocurrencies out there to generate profit. And they're doing this on a scaled up level, with multiple clients and lots of servers. But he'll call and reach out with these ideas like, oh, what if we do this? And what if we do that? There must be a way to not pay tax, right? But the bottom line is if you made profit, whether it's you personally, right, because you have W-2 income, or you brought money home, or your business made profit, you are going to pay tax, always, right? The only time you could get away from that is if you evade taxes, break the law, right? That's one option, not one I would advise. Or if you're at such a scale that you can leverage credits, if you could leverage tax incentives from jurisdictions like what Amazon was doing at one point with New York, right? If you're at such a size that you could say, hey, you know what, city, we're going to bring in thousands of tax-paying individuals. We're going to bring in lots of other retail business and consumers, and you're going to make so much money from us bringing our business here that we want to pay no tax. Okay, then maybe, right? But outside of those two instances, you're always going to pay tax. And in fact, I pointed out to him more than once, and I point this out to other clients, is tax is actually a great indicator of your business. I don't want to pay any tax at all, ever, right? But it's a great indicator because it means that you're making money, right? If I could ever get a tax bill for $5 million, I would love that, right? Because that means I made at least 10 million, 15 million, 20 million, right? Okay. So I try to encourage clients to not get so sucked into the things that they read in blogs and ways to just avoid taxes, not evade. And to start and looking at things from a bigger perspective, from a holistic perspective of what it really means in the example I'm giving with tax, that it's not a bad thing, right? And you're never going to not pay it unless you do one of those two things. You have the leverage and the scale to get away from it, and or you just evade and break the law. Another change that we're seeing is with this tendency to expect for the expert, for the accountant to know everything all the time, to do everything all the time, to see everything all the time. Right? Question I get a lot of times with new clients that came over from a prior accountant is, and we point something out that was done wrong, well, shouldn't they have done that? Maybe, but did you engage them to do all this other research for you, or mitigation or tax planning for you? An example is, I had a client this last tax season, and I use taxes because although we do specialty services and forensics, taxes is something everyone is acquainted with because we all have to pay with taxes, so it's more relatable. But we had a client that had their tax return, they end up owing $80,000 of taxable income, right? And their accountant told them that they owed zero, their prior person. And the reason why the prior person said that is because they were looking at cash basis or accrual basis instead of a cash basis of financial statements. a very simple kind of mistake, but one that really shouldn't happen. And our explanation to the client is, well, keep in mind that the person that they were using before was not licensed. They were not a CPA. They were just a tax preparer, right? So the expectation needs to be brought down a little bit, right? It's okay to have maybe those higher level expectations if you're hiring somebody and paying somebody at the rate of a seasoned professional. But if you're paying somebody at, $40 an hour or whatever it is that just prepares taxes that's not licensed, don't expect them to catch all this stuff, right? You're kind of rolling the dice a bit. And that's our point, is that not all professionals are created equal, right? There's CPAs out there that give other CPAs really bad names. Think what happened with Arthur Anderson and some of the other, like these lawsuits and business managers that embezzle. This stuff happens all the time, which kind of goes back to Dr. Marquez's presentation on ethics, right? It's really important that that's embedded in the industry. And it's utmost important, I think, when it comes to licensed professionals, especially as accountants. Integrity is like the cornerstone of what I believe everything we do, right? Even if it means giving the client an answer that they don't want to hear. The last change in expectations, I think, is associated with transferability of the services. So it used to be, when I first got into the industry, that you would have a client for life, right? That was just a known fact. A lot of times people would not change CPAs. You'd have a CPA and they'd be doing your books or your taxes for 10 years, 20 years, 30 years, 40 years. Not anymore. Now people will bounce around. And one of the reasons for that is because of the cloud. It's one of the main reasons for that, right? QuickBooks Online, which we recommend for most of our clients because it's so easy, that level of transparency, and that it's easy for us to jump in, it's easier for the client to jump in. Now that it's on the cloud, it's not tethered to your accountant's desktop computer that you have to ask for a backup from. Now you could easily just say, what, I'm going to change accountants, cancel their access, and give it to your new accountants. Okay? Very simple. But also, I've noticed that some people move services in the hopes of something better, right? So you have to balance it out between, are you maintaining continuity for the sake of just being, working with somebody that knows you, that knows your business, or are you sticking around just because you don't want to deal with, the chance that you might end up having to be in a worse situation, right? I notice some reluctance from clients nowadays that's primarily the reason why they will not migrate over, even when we note and identify issues of their prior accountant. Either they're not doing things correctly, they're filing things wrong, they're leaving things off the table of deductions with their taxes or other things. But the ability to just pick up and go is definitely changing. You're seeing a lot more attrition with client retention issues, right? It's a lot easier, which is great, right? So for getting new clients, that's good. But for retaining your existing clients, it means you have to work a little bit harder to prove what you provide to them and them staying with you, and that you're doing things correctly. And there's a lot of examples we have of, especially on the business management side of things, of tax returns just not being filed. And then the client gets a tax notice for $40,000, and the prior accountant, they just didn't even file the return. Right? In those kind of situations, it should be a no-brainer to move over. But remarkably, some of these people don't. As bad as that is, your prior accountant just cost you a $6,000 penalty that you're not going to get away from, on top of the tax you have to owe, and they still drag their feet, right? Again, I encourage them, not that I'm a litigious person, but there is a reason for malpractice insurance. And I try to remind them that whoever their provider is, to keep that in mind. And if they did something that negligent, that they should use those resources for them. And you have also the Board of Accountancy. There's a way to file formal complaints there too. The big takeaway is that I think technology has really shifted how people perceive the accounting profession and their expectations of licensed professionals. And now that they seem to expect more. But remember, whether it's you personally, someone else that the value that a licensed professional providing, it's not just them validating something that you could Google and figure out yourselves, right? There's a lot of nuances out there to tax law and accounting rules that you will never find online unless you dig into the crooks and crannies of the internet. And trust me, it's very, very dry stuff. You don't want to do it. So that's what we're here for. All right. Thank you.